Hi, I'm your host, Sophocles. On this podcast, we discuss interesting stock ideas from around the world. The goal is to have meaningful discussions by getting into the numbers and better understanding the opportunity. Thank you for joining us. This podcast is being made available for educational purposes only. It should not be used for any other purpose. Full disclaimer at the end of the podcast. So, with great pleasure, I have today Harvey Sawikin, co founder of Firebird. Harvey has been the lead manager on their Eastern European investments, and I had the pleasure of having him at the event that I host in Cyprus, where Harvey just blew the audience away with his knowledge. So, with great pleasure, we have Harvey, who will be discussing with us Bank of Georgia. Welcome.
Thank you.
So, Harvey, obviously, because we're talking about Georgia, the country, not Georgia, the state, people would probably want to hear about a little bit about history. So, if you have any relevant history regarding the politics over the last couple of years in Georgia, anything relevant, anything that could be a concern, maybe your thoughts also on the 2008 invasion that occurred and what's left from that.
Right. Well, Georgia's been in the news quite a bit recently. They have parliamentary elections coming with a president who's sort of more not super powerful. And they have parliamentary elections coming up in October. The controlling party is called Georgian Dream, and they control a majority of the parliament. And they have recently passed a law which some people, the opposition believes, is being done to kind of cement their re-election possibilities by allowing them to crack down on NGOs operating in Georgia, shut them down if they don't comply with transparency procedures. And this law, which was passed over veto and overridden by the parliament, was criticized significantly by the EU and the United States. And yet they pushed it through anyway. Some call it the Russian law because Russia has a similar law which they use to crack down on opposition NGOs. It's sort of ironic that Georgian Dream did this because they seem to be on their way to being reelected before. The opposition is very disorganized, and Georgian Dream, at least in terms of the economy, has done a very good job. So it's kind of weird that this is a bit of an own goal, I think, but nevertheless, in fact, their popularity has gone down. There's been mass protests with tens or even hundreds of thousands of people protesting this law.
For those who are not familiar with this is the Foreign Agents Bill, and I understand it obliges any organizations and media that receive more than 20% of their revenues from abroad to register as organizations serving the interests of a foreign power. Is that correct?
Yes, I mean, it's not completely dissimilar from laws that other countries have, like the United States has a law, FARA, where if you're representing a foreign government, you have to register. The difference is that, in the United States, we have an independent judiciary. In Georgia, the judicial system is still not fully developed and not perceived to be super effective. So if an NGO was shut down for criticizing the government and had actually complied with transparency rules, they wouldn't really have any legal recourse, particularly, that would be effective.
It's not just the reporting. They could report it and then get shut down because of this?
Well, they have to report. They have certain deadlines to report. It's more that, the law has consequences that can be used to shut down an opposition party. But I think the bigger picture not to get too focused on the law, the bigger picture is that Georgian Dream Party has certain autocratic tendencies that worry people. That they don't really want to give up power and so the election. In other ways, there will be a thumb on the scale, which is not completely unusual in emerging markets, but Georgia really had a perception as being a real emerging democracy with very low corruption. It rated very highly on the Corruption Perceptions Index and transparency. There's a feeling that this is Georgian Dream over the last couple of years has been stepping backwards, while at the same time asserting that they want to join EU. And last week, the Prime Minister was in Germany and he made a speech and saying, our EU dream is completely in place. That's our future as an EU member. EU accession is over 70% of the population wants to join EU. And so you have these kind of competing trends in Georgia. On the one hand, you have a country set up as a democracy that's been working, not perfect, but heading in the right direction, and a population that sees themselves as moving toward EU. But on the other hand, you have this sort of slightly autocratic tendency and a conservatism. And by that, I mean similar to Poland in a way. Poland is very religious. Georgia, like Poland, is a very religious country. They're not ready for some of the, let's say, the LGBT part of EU requirements. Doesn't go over well in Georgia. It's a fairly intolerant country, religious country. So, they want all the economic parts of being a member of the EU, but not the whole population is ready for the whole panoply of things that the EU requires. Part of the population is Gen Z in Georgia. They are ready for everything. But the older generation, especially outside of the major cities, are pretty conservative. And Georgian Dream, that's a big part of their base, electoral base, is these conservative, older. Now, Georgian Dream has a sort of eminence grise, a guy named Bidzina Ivanishvili. He's a billionaire. Mm-hmm. He's the richest man in Georgia, by a wide margin. And he, although he's not an elected official now, he sort of runs the party from behind the scenes. And he made his fortune in Russia. So he also has these connections to Russia. And that's another reason why people are skeptical of anything Georgian Dream does that moves away from what EU wants or the US wants. They say, it's Russia influencing them. And there is some truth to that, but we have to keep in mind that Georgia is playing a very delicate game. They were invaded by Russia, as you said. I mean, in 2008, Russia took over a piece of Georgia, which they still occupy. And Georgia militarily is no match for Russia, of course, and is not a member of NATO. So they don't want to end up like Ukraine. They have to be very careful not to poke the bear in the eye too much. And Ivanishvili has been balancing this quite successfully. So if you look at Georgia's economy, since the war, the economy has been booming. In Q1 of 2024, the economy grew almost 9%. 8%. But some of that happened after the war started. Georgia, Kazakhstan, and certain other countries, Armenia, all received inflows of people from Russia, which boosted the economy. In addition, and some of that has flowed out again. I would say that nobody knows exactly, but so probably half the Russians that came to Georgia after the war started have left again and to go to other places. Businesses also relocated to Georgia from Russia and Ukraine, mainly from Russia. And they found, I mean, maybe they thought it was temporary, but they found, hey, this is a great place to do business. Good people, everybody speaks English, the weather's nice, the food is good. It's a much more predictable and less corrupt place to do business than Russia is. So a lot of those companies and headquarters are not going back. So the boost to the Georgian economy that started in 2022 is still going on. That's one element of it. And then the other element of it is that because people don't trust Russia anymore, it will take them decades to recover from what they've done in Ukraine. It's urgent now to find other transport corridors which don't have to go through Russia. So, for example, there's rail and ports that are being constructed in Georgia so that trade can move that used to go through Russia can bypass Russia between Asia and Europe. There are these there were some short-term boosts to the Georgian economy, and then there are these structural longer-term ones that are not going to go away anytime soon. So, and then the other thing is that Georgia's been very careful. On the one hand, they comply with Western sanctions on Russia. They comply with them. They don't participate in them. So in other words, they're very careful not to act as a transport corridor for banned, sanctioned military or any military type components. However, cars are going into Russia through Georgia that are not used to be coming from the EU. Georgia is now one of their largest exports right now is cars. They don't make any cars, so it's coming from somewhere else. So the balancing act has been very, very successful economically and in terms of keeping Russia calm and not anybody suggesting that Russia might go in and attack Georgia.
Are there any parts of Georgia kind of? I mean, they did the invasion. They took those parts. Is there any other parts where they could come and take, or is that done now? No situation.
I think that's done. There are periodically people say Ukraine's been a disaster for Putin. He needs to have a win, and what would be an easy win would be to take Georgia. They could do that reasonably fast. No, that is not going to happen because they need Georgia. Georgia, Kazakhstan are two countries who still trade with them, and they can't alienate a trading partner. So no, I don't foresee any. If Georgia were to tomorrow join NATO, or it looked like that was going to happen, I guess the risk would be higher, as it was with Ukraine. But it's not anywhere in the near future. Yeah. I mean, they have certain cooperation with NATO, but NATO membership is not anywhere in the near future. I don't think Russia has any reason to do anything like that.
I mean, what about a change, like with what Georgian Dream has done? I mean, I guess that could significantly weaken them in the October elections?
The poll ratings did come down, but the opposition is very fragmented. There isn't any one very strong leader or party. The president, who is kind of now nominally the leader of the opposition, she was born in France. She emigrated to Georgia not so long ago, speaks with a French accent. Very hard to see her really leading a successful campaign against Georgian Dream. But there is a group of parties that's a group of politicians that are trying to unite. And I think it could be a relatively close. What my main worry, everybody's main worry who invests in Georgia, is not that Georgian Dream's going to get reelected. It's that they get elected with a rigged election, that they would lose, and then they do something, they stuff ballot boxes, and then you have the Western observer saying this was an unfair, rigged election, which was not the case last time. Last time, I'm okay, there's certain things that were not fair. Georgian Dream had more control of airwaves and so on, but nobody suggested there was any material fraud in the election. So that worries me, because then the population would be out in the hundreds of thousands protesting, could get violent. That to me is a risk, but I don't think that at the moment it still seems very likely that Georgian Dream is going to win this election and don't have to do anything like that. I'd say the rhetoric that's been coming from Georgian Dream has reduced quite a bit recently because of the pushback they got from the EU. And something the US did that was quite effective here is putting sanctions on specific members of Georgian Dream. Because in the end of the day, these people, for all their patriotic talk, many of them have kids in school and offshore, in London or New York or wherever. Many of them want to travel to Paris and London, and suddenly they're all, so ever since the US started putting these personal sanctions on people, they're smart. They've started to cool off the rhetoric and the anti-Western talk. And Ivanishvili is not Putin. In Russia, the elite is in such fear of Putin that, if he tells you, I don't care if you're sanctioned, you're not going anywhere, buddy, they're terrified and they just fall right in line. I don't think Ivanishvili has that kind of power over in Georgia to tell people, your personal life belongs to me. I don't care so it's not as, he hasn't established, it's not a dictatorship. And it never will be. It's not, he doesn't have the desire or ability. It took Putin 20 years to put in place the regime that he has. He'd have to start working on it today, and, it's not going to happen. So I think all of that said, Bank of Georgia came down. It's down. It was trading at 5,400 pence before these mass protests. Today, it's a little over 4,000. So basically, it's down something like close to 30%, around 30% since the protests. And it wasn't expensive before. Now it's trading at approximately 4 times this year's earnings. Yes, there's some risks. We think that you're being more than adequately compensated for the risks. That since the main risks is really just that one thing, that Georgian Dream rigs the election, leading to a major protest and conflagration, and then Russia gets involved to support the current government. That's the kind of thing that would be quite bad, but I think the odds of that are not super high.
What about on the macro side? I mean, let's say things calm down, whatever, in Russia, and, like you mentioned, there was this benefit from the war. What if that sort of gets, rolled back? I mean, is there that risk, that impact, the wider economy and, of course, the banks?
A little bit, in the sense that if Russia has more avenues to trade with, Georgia wouldn't be as high a market share of Russian trade going through there. So it could affect certain things. But like I said, the boost from Russian immigrants, that's kind of passed already. The two things that I
Mhm.
think are going to stay, as I mentioned, one is the headquarters business that moved there, and the other is the sort of infrastructure, transport infrastructure. Nobody has ever, you know, Russia could replace Putin tomorrow with the most pro-Western person in the world, and it doesn't matter. No one is going to fully trust them anymore and be as dependent upon them. So transport that bypasses Russia is going to be a priority. And China is already, very involved in infrastructure in Georgia. They just signed a deal to build a port. And so, even China, which is Russia's ally, supposedly, is moving very quickly ahead with creating alternatives. And then on the positive side, look, everything Eastern European related is cheap. Everything. I mean,
Yep.
my fund overall, Firebird's regional funds in Eastern Europe, right now our underlying PE on the fund is around 5. And I've only seen that at times of serious crisis. And the last time that I remember the underlying PE of my fund at this level, and there wasn't a crisis going on, was around 2002, 2001. So you were 4 or 5 years out of the 98 emerging markets crisis. People had forgotten about emerging markets. Nobody cared. Yet the economies had recovered from 98. Corporate profits were growing a lot, and nobody cared, nobody cared, nobody cared. So it got to that 2002, 2003. I was pounding the table to people. 4 PE, 4 PE, 5 PE. Some people cared. Most people didn't care. And then one day it just started skyrocketing. And
Yeah.
between 2003 and 2007, I think my fund was up 7 times. And that's the situation we have today, which is that, because of the war, Eastern Europe is sort of off the radar. No one wants to hear about it. And I pound the table to people all the time. And I only have a very, very limited number of very sophisticated investors. I mean, people that you see on CNBC, like that kind of level of people, are the only people who've been investing in my fund because they have that kind of mentality, the contrarian thing. I feel that, and Georgia is in that. So I don't think if the war were to end, almost on any terms, if the war were to end, I think that you would see everybody looking at Eastern Europe again and saying, why is everything so bloody cheap? And I think whether it's Poland, Georgia, Romania, all these countries, you could see a kind of inflows of capital. And one other thing I'd like to say is that, and it hurts me to say it, it really hurts me to say it, because I'm not a fan of Donald Trump. But after last night's debate, Trump is now in the betting markets is something like 60%.
Mhm.
And I believe that he will trash the dollar if he becomes president again. And emerging markets are the single highest correlation that they have is with the dollar, an inverse correlation. So a weak dollar means a strong emerging markets. Between 2004 and 2008, the US dollar dropped something like 20, 30%. And emerging markets had their best rally ever. And it could happen again. So I would say that, every Americans who are now probably, I had lunch the other day with a private wealth manager, JP Morgan, and I said, what are your clients, like 95% US exposure? They said, yeah. So Americans have no exposure to international things, and I think they're going to need it. If the dollar starts to weaken significantly, that's another element that I think should be taken into account in emerging markets.
You mentioned Georgia, you mentioned Kazakhstan. I think over there the banking sector is also interesting. Halleck is trading pretty cheaply
Yeah.
there. Of course, they
Yeah,
also
Halleck's
have
another
their
one of our top positions. Like Halleck and Bank of Georgia have in common that they're essentially part of a duopoly. And basically in Georgia, you have two main banks and hardly any fintechs. The fintechs never really came into Georgia because the market really wasn't big enough. On the one hand, the language was a big problem. The Georgian alphabet is completely different. It was just too hard. So Bank of Georgia
yep.
and TBC, the two main banks, they became the fintechs. So Bank of Georgia has a super app there's no need for any fintech. It's too late. No one is going to come in. Like a very high percentage of the Georgian people bank on their phones with either Bank of Georgia or TBC. Nobody else is going to. It's too late. No one else is coming in.
Yeah. Yeah. Yeah.
So you have a duopoly there, and in Kazakhstan, you also have essentially a duopoly. You have some other smaller banks, and Halleck is like Bank of Georgia trading at extremely low PE. A couple more things I should mention about Bank of Georgia that are kind of near-term catalysts. So one is that in the first quarter of this year, they acquired the largest bank in Armenia, which now makes up about a quarter of Bank of Georgia's assets. This Ameria Bank in Armenia, this was a brilliant acquisition. There were distressed sellers, and they bought it for about a 0.6 times book and 2.5 PE. Highly accretive transaction to Bank of Georgia. Only starting in Q2, they will start to consolidate Ameria Bank. They didn't in Q1. And so the earnings of Bank of Georgia, I know, are going to jump significantly in Q2. The CEO on the earnings call pointed out that pro forma Bank of Georgia was making about $150 million in Q1. And he said that's our run rate for the year. But you didn't see it because they weren't consolidating the earnings yet from Ameria, but they will in Q2 and going forward. So you have a likely very strong earnings performance in Q2. And then the other thing is a dividend is coming. Well, by the time that anybody sees this podcast, the record date might be passed. But in July, there's a dividend coming. There's their second dividend of the year, and Bank of Georgia returns capital in two ways, through dividends and buybacks. And it's their goal to return anywhere between 30 to 50% of their profits via dividends and buybacks, which they've done. And they were buying back shares throughout the entire protest crisis in Georgia. And I asked on the conference call, on the earnings call, how come you do, or somebody asked, why do you do both dividends and buybacks? And they said, because we have investors that prefer one and we have investors that prefer the other. That's what I like to hear. They are thinking about what investors want, and they're doing it. And that's the whole baked into their mentality. They think about what their customers want. Bank of Georgia has you know what NPS is, right? The Net Promoter Score.
Yep.
They have an NPS of 59, something like that. This is unbelievable for a bank.
It is 50.
It's unbelievable for a bank. I mean,
Yep.
JP Morgan's NPS is something like 35, 32. Guess what Citibank's NPS is? Like 15.
TBC is actually even higher. I think it's.
Is it?
I think I saw. Yeah.
Yeah. So they're very customer focused, and you see it in the growth and of all the products that people. So they're very shareholder focused and customer focused, and then also their digitization has been a huge success. I remember 4 or 5 years ago, the CEO implemented Agile, which is a sort of software development program, a system. And I remember thinking, like, who does he think he is? Like Steve Jobs or whatever? Yeah, I mean, the results of it are amazing in terms of their success in developing a highly user-friendly app and moving customers onto the digital platform. What they do as a result of that is that they can shut down branches. So they've been consolidating. They have many fewer branches. They still have a lot of full service branches because people like it and they can cross market things. But they don't need, for example, they used to have these sort of express branches, which was not more than some ATMs and maybe 2 tellers. They don't really need those anymore because if they don't need to really sit down and talk to a full service banker, they're just going to do the transaction on their phone. So you see that in the cost to income ratio. You see that in the efficiency ratios, which are very strong. Holic also very, very strong cost to income ratios. So yeah, those are all a lot of the other kind of thing about Bank of Georgia that makes it kind of interesting is just, people ask us, like, why do you have so much bank exposure? Well, the part of our fund that invests in what we call EU convergence, the countries that are either in EU but are junior members or want to get in EU, the attraction of that is the very high growth rate that exists until they're actually full-blown EU members. If you look at the Baltic states, when I started investing there, GDP per capita was probably $3,000-$4,000. Now it's, I don't know, over 20. It's much more in line with the rest of EU. And the best way to play that are banks. Banks are it's essentially a leveraged play on the economy. Banks, maybe retailers, those are the ways to play growth in convergence countries. And that's what Georgia is. Georgia GDP per capita, it's grown a lot. It's about $8,000. When I started investing there, I don't know, it may have been 3,000 or less, maybe 2,500. They still have a long way to go just to catch up to places like Romania and Poland, and a long, long way to go. So you could stay in a bank in a convergence country. You don't have to trade it. You can just own it for 20 years, never sell it, and it just keeps growing. And I have one in Romania, Bank of Transylvania, which we bought shares in. I think it would have been 2000 or 2001, when it was a fairly small regional bank, maybe 4% market share. Now it's the largest bank in Romania, so it's quadrupled its market share while the country has been growing at a very high rate of return for 20 years. I think this is a 100-bagger. We've actually lost track of what we've made on this stock because there have been so many bonus splits and bonus issues and dividends that I don't even know, but I think it's definitely got to be in the 100x. Didn't have to sell it. It's at a new high right now, and I think it still has plenty to go because Romania still has ways to go. So that's Bank of Georgia, where they stand. But again, the key is you need to stay on that EU track. There are countries in the region that fell off and sort of got mired in corruption, and then you don't get that long-term growth. If you look at, let's say, Bulgaria, hasn't been. We used to own a bank there. We had to sell it. It just didn't. They're mired in corruption for a decade and 2 decades, and they can't seem to get out of it. Ukraine, frankly, has been a disaster, investment disaster for anybody who touched it, even before the war. It's a cycle of corruption you have to get out of. So if Georgia stays on the right path that the government says they're on, then this is something I expect to hold for many, many more years to come. And the people know it. People are smart. That's why they're so determined to get into EU. That's why the Ukrainians were determined to finally push forward toward EU, and led to this conflict with Russia, because they knew that the previous system was just a cycle of corruption. They could never get out of it. A couple more things about Georgia I should mention. The economy, the currency's been, so I would say, okay, well, what's the main risk? You say it's at 4 times earnings. You say there is some things. What's another way I could lose money? Well, when you buy a bank, you're always buying the currency, right? And sometimes I've actually forgotten that, to my detriment. Like, I say, well, it's at 4 times earnings. It can't get much cheaper. Yeah, it can. If, in dollar terms, it can. So so we always have to look at the currency. The fact is that the Georgian currency has been quite strong. And in fact, it's been, for the last 2 years, one of the strongest currencies I'm aware of against the dollar. And it has a couple of supports. I mean, one is the sort of foreign direct investment that's growing. So all this money comes in to build these rail and port and so on, and relocation. First, it was the Russians coming in, bringing money in. Then it was headquarters of companies relocating, bringing money in. So you have that support of the sort of increasing investment in Georgia. And the other support that you have is the remittances. There's a lot of Georgians living in other countries, many of them in New York. Seems like half the Uber drivers I take have names like Georgi and Levan. I know they're Georgian. Sometimes if I'm in a friendly mood, I'll say, hey, Georgian, huh? And we'll start talking about Georgia. But they're always shocked that I've been there. But anyway, so there's a lot of remittances coming into Georgia from Georgians working abroad, and so they send money back to their families, which also supports the currency.
What about liquidity there? I mean, Georgia does have, like, I think I was looking this up yesterday, 24 billion in external debt reserves. Foreign currency reserves are about 3.6 billion. So they have like 3 to 4 billion debt service payments. So if something, I don't know, to happen, some recession or a global slowdown, I mean, could liquidity be reduced and be a problem for the country? Or
I mean, they could face higher interest rates. I mean, I don't think the rollover next year, I think, is over the next 12 months is 3 billion, I think you mentioned, and that's a very financeable amount. Yeah, it's possible that they will have to pay a higher rate because of this turmoil that's going on. Message that Bank of Georgia had on their recent quarterly call was that the thing they wanted us all to understand is that they've seen no effect on their business. For like a day, maybe, when the worst of the protests were going on, like mortgage applications slowed down, but then they came right back. Business is going on as usual in Georgia. I would imagine that there may be some hesitancy in new foreign direct investment projects, short-term ones rather than long-term infrastructure. So maybe a little bit of an effect, the turmoil and all the bad headlines. But overall, the business conditions have not deteriorated. So therefore, and bond investors, people buying their bonds, are going to mainly look at that fact. The currency's come off a little bit since the foreign agent law, but not that much. They haven't had to do a lot of intervention to support the currency. Before the protests started, it was oddly strong in Q1. Usually Q1 is a weaker period for the Georgian currency because that's when they import energy. And it was oddly strong in Q1, which may have reflected strong remittances or some big foreign direct investment that was coming in. It's interesting because 5 years ago, one of the big issues with Georgia for me was that the currency had no real strong underpinning. Now it really does, with all of this direct investment and this very strong growth. Unemployment's come down a lot. One of the challenges the country has had was urbanization. You had a very large rural population, unskilled, and as agriculture became more mechanized in Georgia, what do you do with all these unskilled farmers? And so they've done a good job of urbanizing people, new jobs being created in all different industries, including in tech. IT has been one of the growth industries in Georgia over the last year. Some of them were people coming from Russia. Not only, there was, new VCs starting up. Unemployment rate still looks rather high, but it's also misleading because a lot of people are still in the gray economy. So they claim they're unemployed, but they do import-export out of their trunk of their car, And that's another opportunity for the banks, which is to get those people into the real economy, the visible economy, get bank accounts. That's still to come. So when I see a high unemployment rate, to me, that's opportunity for Bank of Georgia. Those people will ultimately join the visible economy, and they'll need a bank account.
Yeah. Now,
TBC. Speaking of which, you asked before about TBC. Another excellent bank. Their Georgian business is comparable to Bank of Georgia. I think Bank of Georgia's performed a bit better. They've grown market share against TBC lately. So I think they're, on most of the metrics, they've outperformed TBC. The major distinction between the two and why we haven't owned TBC is because while Bank of Georgia was returning capital very heavily, TBC was investing a lot into an expansion to another country, which was Uzbekistan. And we have some doubts about that particular choice. We may be wrong or right, but Uzbekistan is a country, a Central Asian country, and it is one where there's a lot of insider kind of control of things. They've had, they're not a model in terms of democracy. And so, I'm always kind of nervous about, what foreign interloper is going to be allowed, how much market share they're going to be allowed to get. It has a large population, which is probably one of the reasons TBC was interested in it. And there was a lot of white space in terms of digital banking, which is an expertise that TBC has. We were just much more interested in the capital return policy at Bank of Georgia than in the Uzbek expansion. And then Bank of Georgia did the Armenia deal, which to me, from my point of view, is very superior to the Uzbek deal, because Armenia is a country that is very similar to Georgia in terms of where it's going, the mentality of the population. They bought a bank. In Uzbekistan, TBC is trying to build a bank from nothing, or they acquired some license, but basically they're building it. It's a greenfield. Here, Bank of Georgia acquired the largest bank, which was already quite profitable. So it's a much lower risk business, operation. So that they're doing.
Didn't Bank of Georgia try to do an expansion in the past? I mean, why do you think this time this is going to succeed?
This was under previous management a long time ago. They made two big mistakes. One big mistake, which was Ukraine, going into Ukraine. And as I've said, many of us made the same mistake. I've lost more money in Ukraine than any other country ever. So it always seems like it's going to be great, and then it didn't work. So that was their biggest mistake. They have a small bank in Belarus. I don't remember why they got it. It's not that big of a piece of their business. It's been profitable, and I don't know what they'll do with it. Maybe they'll sell it at some point. But the Armenia deal is completely different. Like I said, they were buying the largest bank in the country at a very good price in a country which itself grew 6% in Q1, which has a lot of potential, Armenia. Firebird, we were trying to figure out how we could invest in Armenia. What could we buy there? Because we liked the story. And then Bank of Georgia did it for us. So we were delighted with the acquisition.
See, Uzbekistan is like 10 times the population. And I remember a little while ago, I was reading that they had this massive privatization plan that they wanted to implement. So, I don't know where they are with that yet. I mean, do you have any thoughts on that, on Uzbekistan then?
I haven't followed it other than to say that most of the privatization plans over the last 10 years in Eastern Europe, they're not structured in a way that really is very beneficial to foreign investors. Usually they're trying to sell, companies at top prices. Sometimes, companies that need massive restructuring. So, look, if there's a mass privatization plan in Uzbekistan similar to Russian voucher auctions, I'd be very interested in it, but I don't see. But look, I said, I think Uzbekistan, it's a big country, a big population. It's and the guy that TBC brought in to do this expansion is really good. He built TCS, Oliver Hughes. He built TCS in Russia, did an incredible job. It definitely made me sit up and take notice when he joined TBC. And if there was no such thing as Bank of Georgia, I probably would own TBC, but there is. And so it's just my personal preference. But
or maybe own TBC. Both. Maybe own both.
You could, but then I also have Georgia Capital. So we have two big plays on Georgia. Georgia Capital, as you know, is a holding company that owns just under 20% of Bank of Georgia and has a lot of other businesses that give you exposure to the wider Georgian economy. And as I say, we have a lot of banks in Firebird. Yep. We have Hollick Bank, we have Bank of Transylvania, we have other banks. For my second stock in Georgia, I just didn't need another bank. What I needed was something else. Well, with Georgia Capital, we get healthcare, we get hospitals, we get insurance, we get renewable energy. We get a whole bunch of different businesses that give you exposure to the growth of the Georgian economy. So it just fits our portfolio needs more than another bank.
If someone were to do then a play on Georgia, and they were only to do one, then would you do Georgia Capital as kind of like the ETF type thing of Georgia? Or would you just say, no, I'm going to go with Bank of Georgia?
I think Bank of Georgia at the current price is just kind of an opportunity, because if everything goes well through the elections, it should rebound to where it was before. I don't know why it wouldn't. And then you pick up 30% right away. Of course, Georgia Capital also was considerably higher than it is now, about the same. But to me, Bank of Georgia is very liquid, dividend coming. Georgia Capital doesn't pay a dividend, although they do buy back shares. So I just think that the first thing that's going to pop, if everything goes well in Georgia, the first thing that's going to pop is Bank of Georgia, and then Georgia Capital will come along later. That said, if you go to a lot of deep value conferences, and you probably do, Georgia Capital comes up a lot because people like something that seems just so ridiculously cheap. Bank of Georgia looks very cheap, but to a lot of people, Georgia Capital looks ridiculously cheap, and people like holding companies trading at huge discounts. So Georgia Capital is probably trading at about a 60% discount to their reported NAV. Now you could argue that maybe some of their marks are maybe a little high, given that they're based on comparables in countries that don't have political crises going on. But nevertheless, it still seems way, way too cheap. So for deep value kind of people, Georgia Capital is going to look very tempting. But for, your plain vanilla investor who says, I just want something reasonably liquid. I don't need something that is a very high degree of difficulty. I would say just Bank of Georgia at 40 pounds is and 4 times earnings and a 7% dividend yield.
What do you
Doesn't
think
get much better than that. And 30% return on equity and 1 times book. So you essentially you get your money back in 3 years. And sustainable ROEs. They've been generating return on equity at this level for quite a while now. They've proven it's not flash in the pan. I'm sorry, you were about to ask.
Yeah. Do you think this, it's cheap. It's at a discount, to definitely to the developed world. I mean, just ridiculous ROEs. But, can this gap close? Do you think there'll be some sort of re-rating, or are you just more banking on that there's a high likelihood of making money and just a low likelihood of losing money? How do you see this developing?
If people are comfortable that Georgia's not going to go in the more Russian way and become sort of a autocracy and move away from EU, then you should get back to a normal PE in Eastern Europe for banks seems to be in the 6 range, 6 to 7. I know a couple that are higher, but that's kind of where they've been sort of oscillating around that PE for quite a while now. So I think you get from 4 to 6 pretty easily. To get a re-rating beyond that, then I think we're talking about the general emerging markets asset class. And as I said before, I feel like it reminds me of 2002. And if Trump gets elected and starts to force the Fed to cut rates, replaces Powell, brings in some Fed chief who will do his bidding, and then he tells them to cut rates down to where they were 2 years ago. And he also keeps running, and he runs deficit, cuts taxes and runs deficits like he did when he was president the first time. I don't know. I think we're in for some trouble with the dollar. And I think that, I have, a very significant percentage of my net worth outside the United States because of my funds. That's where it is. But for most Americans, there's going to be a very rude awakening when they're 95% in dollars, and then the dollar starts to tank. And then they say, gee, I mean, I can't even afford to travel anymore outside the US. I don't know. And the price of imported goods starts to go up a lot. So I think that, the second re-rating of could happen. But even not, like I said, back in 2003, there wasn't any obvious trigger that started that huge emerging market, bull market. Maybe the Iraq War, it was just at the point where it was clear that it would be over rather quickly. So I think what happened was, now I'm going back over 20 years, my memory was that emerging market, when Bush became president, and he started to do things that would weaken the dollar, because that's what happens under modern Republican presidents. You can go and look it up. And then what happened was the Iraq War started and the dollar went up and EMs were weak because of general risk aversion. And then sometime around mid-2003, when it became clear that the war was going to be easy and be over fast, then the trend resumed in terms of EMs going up. I don't remember when the dollar started to really weaken, but starting around mid-2003, we were off to the races. So if history repeats itself, if Trump gets elected in 2025 at some point, he's going to start to do things that weaken the dollar, and EMs will start to go up. And there's been some life in the EM index recently. It could be the market looking way ahead to these kinds of things. I don't know. But if you look at the emerging markets index, it seems to have bottomed out and show some signs of life.
And you said you like to play EM is through banks and retail. I haven't looked at a lot of retail. I have noticed, things like Dino Bolska, which seems to be a lot of investors' favorite
Mm-hmm.
within Poland, but that's not cheap. So is it that banks are cheaper than retail, and that's your preferred vehicle, or there's more opportunities within banks rather than retail in
Yeah, I mean,
EM?
we have a couple of retailers in the fund, uh, but the problem is they tend to be rather illiquid. The ones we like, the cheaper ones, they tend to be a little less liquid, so not on the radar screens of the bigger investors. We have a retailer one in Lithuania, one in Estonia. The Lithuanian retailer stock is quite illiquid. Um, but so we did have a great retailer in Russia, X5, but we had to sell it. I loved that stock. Unfortunately, we had to sell it. So no, there's not I think you're right. It's more of a lack of. The great thing is that every big country, every good Eastern European country should have at least one publicly traded bank to play. So you can usually find that. Retail, not necessarily. It depends on,
Yeah.
like Kazakhstan doesn't have a listed retailer. They have two reasonably liquid listed
Yeah.
banks. They have an oil company that's only traded locally in the Kazakhstan stock exchange. So not so easy, That's why people give or should give money to people like us, because we can do things they can't do. Like I can go into the local Kazakh stock exchange and accumulate,
Yeah.
telecom or an oil company. They can't do it. They think they can. Just go try to open up a brokerage account in Kazakhstan and see what happens. See if you can. It's a
I
challenge.
mean,
It's not easy.
I
We have a
know.
back office that does this professionally. I've been doing it for 30 years professionally, and still it's
Yep.
like pulling teeth to open up a new account anywhere these days because of compliance, FATCA, and all the things people are afraid of. So, it's just too difficult. I would say
You need
that
significant scale in order to do something like that.
you just need infinite patience and the ability to, provide documentation like they require apostilles and all kinds of things. It's just not possible for most people. So, that's a positive and negative. The positive for us is that we can walk in there and buy things that very few people can buy at great valuations. The negative is then who's going to come in after us and push the stock up? Well, the answer is the locals, the domestic people. And what you want to see is a country where they have a local equity culture or pension funds and growing, and so you have locals. And then there's always the hope that one day a stock gets big enough, liquid enough that it can then list on uh, a major international exchange, as Bank of Georgia did. And so when I think we bought 20% of Bank of Georgia in 2004 in direct transactions. It was only listed locally in direct transactions for, I know it was less than $15 million, 20%. Now it's, in the billions market cap. Of course, there have been many capital increases along the way, and we sold along the way some, but, so that's the holy grail of emerging markets investing is you buy something really cheap locally, you
Yep.
hold it all the way until it's on the London Stock Exchange, and that's when the big international institutional funds come in and buy it, and you can sell to them, or you could keep it if it's still good or whatever.
Yep.
But that's the
For
dream.
people Or people just get interested all of a sudden again in the country or the region or wider. I mean, one of my first jobs I was working, we went to Argentina 2002 after the default. And, we got everything, incredibly cheaply. And then,
Hmm.
because no one wanted it. But, then it was a few years later, we went back and everyone and their mother was there. So it's sort of, it's what you're saying. You want to be buying it cheaply and then come.
Argentina's back again. I know a few people who've invested in Argentinian stocks and bonds. And, I guess you could say this is the triumph of hope over experience, that they won't get taken again. I happen to like Milei very much. I thought his speech in Davos was fantastic. So I'm rooting for them, but people have been disappointed several times in
Yes.
Argentina. But the difference is,
They're
I
like the
agree with
English,
you.
they're like the English national team, I think.
Always disappoint. The difference is that opening accounts in emerging markets now has become so difficult because of all the regulations and FATCA and everything else and compliance, that it takes much longer for people to come in. And the market has to have grown to a certain level of importance before anybody's going to bother and do it. So, Romania grew enough so that now you have a lot of foreign players in there, but it didn't happen right away. So Kazakhstan has almost none in the local exchanges, as far as I'm aware. Some, but not many. So it takes longer. So you either have domestic support, like in Poland, where they've had pension funds who support the local exchanges for many years, and are big players, or you have a company that gets big enough and good enough that it can list internationally. So those are the two routes to pushing stock valuations up. Or you just got to take the long view, like we did in Romania, and it took a long time, but eventually you reach nirvana when the countries grew and grew and grew, and then market grew large enough, and then people start to come in. And then it's a virtuous circle, because what happens is foreigners start to come in, and then the locals say, wait a minute, we can't let foreigners buy up our stock market, and then they start buying. You get a lot of increased retail participation. This was happening in Russia, by the way, before the war. That's what's so tragic about it. I mean, if you looked
Yeah.
at in 2021, the growth in the Russian retail stock investing was explosive. And we thought this is going to go into hyperspace. And then what happened? But it takes a long time for the locals to develop a equity culture. And when they do, though, can be quite powerful.
Yeah, it really depends how much, I think they also get hurt. I've seen that happen locally. And so, they list in London. Is the next step the US, kind of like what Caspi did?
I don't think so. I think the reason the Caspi moved to the US is that there's such a demand here for fintech related things, and it positioned itself as a fintech, not as a bank. Bank of Georgia
Yeah.
could do that. It doesn't pretend to be a fintech. It is a fintech, but it's a bank. And Caspi, in fact, has been sort of reducing the banking part of
Yep.
their business and increasing the payments and e-commerce. They're not really primarily viewed as a bank, and so perfect for U.S. listing. That's not the case with Bank of Georgia. London Stock Exchange is more kind of logical place for Eastern European
Yep.
companies to list, because people are just more aware. I mean, even Caspi, I saw Jim Cramer talking about it when they listed, and he couldn't pronounce the name of the country. He called it like Well, there's this new stock. By the way, it was interesting because this was at the time the US market had been sort of stagnating and there hadn't been an IPO in a long time. And he said, well, there is one, there's an IPO, and I think this is a good omen for the market. It's a company from the country of Kazakhstan. And I was like, so he couldn't even say the name. People they just don't even know, they don't know anything what Kazakhstan is, but they knew this was a fintech and it had really good numbers. And by the way, although he couldn't pronounce the country's name, he was right. That was a good sign. It was the IPO window was opening, and people were ready to put money back into newer things. And it was one of the first. I don't remember when that was exactly, but it was one of the first successful big IPOs.
I mean, yeah, I think it went into the US at around 100, and it's like 130 now.
Yeah, it's done. It's done well.
Yeah, just
it's
amazing.
Not a stock that we've ever owned, probably wrongly, but the weird thing was we were never comfortable with their banking side. We always thought that the numbers didn't make sense. The payment side and the e-commerce side is very cool, but so we just couldn't get comfortable with it. And like I said, we had Holic, which has been a great performer, pays 15% dividends. Yeah.
I actually, I got into Kaspi, and then after the war, when it dipped, I bought some more. So I was quite happy with the.
Well, I just published to promote. I just got to promote my Substack. I just published yesterday on my Substack something called "Averaging Down, Does It Kill?" And it's all about when should you average down. When should you not average down? And then I start with stocks, and then I go into something else, which is averaging down on art, because I collect art, and that's something that I'd never seen anybody write about, which is if you owned a Picasso, or if you owned a Gerhard Richter or something that you bought for $1 million. And suddenly the same kinds of works are going for 500,000. Should you buy it, or should you say, "Uh-oh," So I sort of wrote about averaging down on art and averaging down on stocks. So check it out.
So what's the Substack? The name of it?
It's just called Harvey's Substack. It's Harvey. If you look on Substack and just look for Harvey Sawikin, you'll find it. Okay. And the last one I wrote before that was about my visit to the Berkshire annual meeting for the first time, and some observations about Buffett and how he conducted the meeting and why he's like Taylor Swift. And then the rest of it was about reading Charlie Munger's book for the first time, and
That's awesome.
Takeaways from that, which was a kind of thing like I read it in a couple of sittings. I couldn't put it down, but there's some. And I took
book? Which one?
Poor Charlie's Almanac, the collection of his speeches and some writings, and a lot of really interesting stuff in there. So I try to write mostly about investing, although sometimes about other things.
Okay. So on two other things that I'll ask you on Bank of Georgia. So they did Armenia. Is like Azerbaijan next, or some other country?
I think it's going to take them a while to digest Armenia. So I think the CEO, Archil, he kind of did not, he didn't, he tried to downplay the idea that they were now going to start adding country exposures. Armenia, he felt, was something that was unique because it was a country that they felt was very similar to Georgia in a lot of ways, population-wise and system. And it came at such a good valuation, and it was not a greenfield. It was a successful business bought at a big discount. I don't think it would be Azerbaijan. If I saw Bank of Georgia expanding to another country besides Armenia, nothing like in the region sort of jumps to mind exactly. I mean, I suppose, I don't know. I don't really see it. I don't see
Okay.
any logical further extensions
Okay.
past Armenia. Also,
So I
there's a
found
problem
it.
that
I
Armenia and
found your.
Azerbaijan don't get along, which is another
Yeah.
problem.
Yeah. 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 Yeah.
They're
Yeah.
at
Yeah. Yeah.
war. So I think if you had an Armenian, if you're the largest bank in Armenia, I don't think you want to set your foot in the in Azerbaijan economy. I don't think you'd be so welcome.
Well, I was thinking, there's Russia, Armenia, Azerbaijan, and Turkey all around them. So, and I was like, then I was thinking, why did TBC think all the way to Uzbekistan? They're a big country.
And
Yeah. Yeah.
and there was a lot of white space, especially in the digital.
Yeah. Now, I did find your Substack, Harvey Sawikin Substack.com. So,
Yeah. Okay. Yeah.
I will
Check it
check
out.
that
Let me know
out.
what you think about the
I will. I will.
averaging down.
And so, one last question that comes to mind, and I know your mandate with your Eastern European fund is to do Eastern Europe. If though someone's listening now and they have a global mandate and they can do anything, they can do US, they can do Indonesia, they can do Argentina, they can do India, they can do Kazakhstan or Georgia, is still Bank of Georgia, do you think is like one of the best opportunities out there right now? Or Bank of Georgia would be 0.5% or something of someone who had, let's say, some sort of global unrestrained.
I would say that it's one of the best things that I know of. And, I don't, I'm not super knowledgeable about other emerging markets. I think investing in emerging markets should be done, especially in equities, by people with regional expertise. I think the idea of global emerging equities has never been a good idea. I don't care if you're Mark Mobius or whoever you are. I just don't think, I think it requires a level of expertise to understand. It's all we can do to understand the 8 countries that we're active in right now, much less also have to be experts on Indonesia, Egypt, and South Africa. It's just not possible. I think you could do it in fixed income currencies. I know a very good trader does that, but equities, no. So I think that I wouldn't fool around with emerging markets unless you're really going to make an expertise of it. That said, I think Bank of Georgia is a fairly simple story. You can read the financials, you can understand what's going on in Georgia, read the news, and you'll know almost as much as me. It's not that complicated. If you wanted to go into, India, that's a whole other thing.
Yep.
There may be stocks there that are easy enough for non-specialists to understand, and then you could buy them. And as far as anything in the world, including any asset in the world, I don't know. I don't know too many things that trade at 4 PE, 30% return on equity, with a 7% dividend yield. And there's not a big value trap. So
with decent management, from what you said,
great
and
management,
also
great management,
good risk management as well.
There's a famous, no, I don't, he's famous to me. He's not famous to everyone. An emerging markets manager who's now pretty much runs his own money, and he's been around as long as me, so I've known him for years. And he commented to my partner Steve in Vail that Bank of Georgia is the best bank in the world. And to me, that was a boost of confidence.
All right, Harvey, that has been fantastic. I've had a lot of fun. I learned a lot. I think you could have done this podcast really without me, because I was just listening like 99% of the time, and I always love listening to you. So if anyone wants to find out more about your firm, about yourself, where should they go?
Well, we have a website, www.fbird.com, and there's a lot of stuff that's available. You don't have to register. Accredited investors can register, and we can send you more information. I also have as I mentioned before, a Substack where I publish things, little articles about investing. And that's you can also find my novel, which I wrote when I was 30 years old, on Amazon. And I had a one-off novel which I published,
What was that
four-starring
called?
Firebird. It's called The Education of Rick Green, Esquire. Now just called Rick Green, Esquire, because I eventually republished it myself under myself after. Originally it was Simon & Schuster, but then when the rights reverted to me, it was out of print. I republished it, so it's available on Amazon.
Any investing in what's that about?
It's actually about a young lawyer. It's based on sort of my life as a young lawyer and his love life and his parents. But then he becomes an insider trader, and then he gets the SEC goes after him, and he's trying to not get caught. So that part's fictional, but everything up to that was kind of based on my own experiences.
Good to know.
Yeah,
Good to know.
I'm on Twitter, but I don't tweet that much because ever since Elon throttled it, nobody sees what you tweet anyway. So
okay, yeah, I've never really gotten into the whole tweet thing.
I used to tweet a lot, but then they started that you have to subscribe and pay, otherwise they throttle you. And I just, on principle, I wasn't going to pay any money to Elon Musk. So
you guys, besides being Eastern European specialists, I understand Steve manages a U.S. focused fund. Is that right?
Yes. So right now we have what's open is an Eastern European fund with ex-Russia. It's just the other countries I've been talking about. And the other thing we have that's open is a U.S. value fund, which is managed by my partner, Steve Gorelick, which started as kind of our own money, like our PA money, which we essentially pooled together. And we felt that nobody really was doing, very few people were doing a really pure value, fundamental value strategy these days. And I thought it would be a very good, I have plenty of index exposure, but I've always been a value investor at heart. And Steve is doing like that kind of, deep research on U.S. equities, mostly larger cap, so not small caps. And so that's the other thing we have open.
Okay, I'll have to have Steve on the podcast at some time.
Yeah, you should.
Future.
He's got a lot of interesting things to say about the U.S. market and valuations.
All right. Well, it's been a great pleasure as always. And like I mentioned before we started, if you're ever in the region, feel free to give me a call.
I would be happy to see you in Cyprus.
All right.
I've been dreaming about going back, so I'll see you there.
All right. Well, have a good weekend, Harvey.
Thank you.
Thanks.
Thank you. Thanks again. Bye.
Bye-bye. The podcast episodes should not be copied, distributed, published, or reproduced in whole or in part without the prior written consent of the host. These recordings are for informational purposes only. This recording does not address all risks. The podcast is not intended to be relied upon as a forecast, research, or investment advice, and are not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. The views and opinions of any podcast participants are subject to change and are not necessarily those of any companies affiliated or associated with the participants. The participants cannot guarantee the accuracy of the information in this podcast and has not independently verified the accuracy or completeness of such information or the assumptions on which such information is based. There is no guarantee that any forward-looking information will come to pass. Reliance upon information on this podcast is at the sole discretion of the reader and/or listener. Past performance is not indicative of current or future results. This podcast is being made available for educational purposes only and should not be used for any other purpose.